right, we are starting another session today. We missed last week, but the markets have not done much last week between the time we met a couple of weeks ago and today. There has been some consolidation. Of course, there's been a little bit of an action which we'll look at, and then we'll see how the rest of the week, the rest of the month goes, how October shapes up. We got quite a few interesting things happening right now in the world. So let's dive right into it. Again, as we look at the daily chart, a couple of weeks ago, Tuesday, right at the beginning of October, we've formed a bottom, and from there we are heading back north. So this is the bottom that we formed right at the beginning of October, which when we are looking at our monthly chart, this is our new trend. And where we started way down here, and again, you can continue to make the argument that, hey, this has cleared 38.2, so why do you want to start there even on the weekly? But then on the monthly, this is kind of sideways. That's why I have it anchored here, because this is the monthly trend line. But if you prefer to say, hey, I'm going to look at the weekly and I'm going to make this trend different, so you can make it go from here to here on a weekly basis, and you would not be wrong as well, right? But I'm just going to keep mine as the monthly. That's what the monthly is telling us. And then when we go to the daily, I want to see, in that recent down move, right? How much of that down move are we going to recover again to go back? So we're testing the 38.2, which is our green to green zone, right? Green to green zone on the monthly. We're testing that 38.2, but just to look at perspective, like this daily downtrend that we've had since July, right? Since July, it's been nothing but lower highs, lower lows. Again, we're still at a lower high right here, right? We have a recent higher low, but we're still at a lower high. So that's why I like to draw this fib on the opposite side to see, hey, is this trend over, right? And this trend is over when it captures that 78.6. But we're not using this to trade. We're just looking at it to gauge, because we said, on our monthly, we're at that 38.2, so we're going to take this upward action. So when we came down, tested that 38.2, it consolidated, and then it didn't give us a nice railroad tracks or engulfing in this consolidation area, but it kind of gave us a flag here. So if you wanted to take this flag, it would not be wrong, right? So anybody who wanted to take this trade here and slightly below that 38.2 as our stop loss and our 2x ratio right here. So this is actually perfect, right? We took some heat for a few days, but still it's an upward movement, which is again not wrong if you have looked at it from that perspective. Because what we said was, if you get this, right, if when we're testing this, if we reverse and this, right, this zigzag, which we have here, right? If we get this zigzag, we take the trade, right? That's another place where you can say, you know what? When I form this zigzag, this area here, I can take it, or I can say this hammer here. So either when we break out here, right, when we break a penny above, right, usually that's one entry, and we go again below here, below the recent low, that's a logical area. That's one place we can take it, or we can say, you know what, I'm going to pull the trigger sooner because this is where I really want to enter, because I have this hammer. I have this hammer like twice. It created support. I have this hammer. I can take this. Stops remains the same. Exit our 2x is somewhere here. Right? So this consolidation entry or slightly above it a few days later, same results, right? We have our 2x. And we keep moving our stop. So here's a tricky part. Wherever you did an entry, because this was a valid entry, green to green zone, we tested the 38.2. Wherever you took that entry after your 2x move, where is logical stop, right? So one is here. So the first one is break even. Second one is here when you're making this move. Now you're 3x territory. So let's bring this back here for just to see how far we went. So we went this high. So because we went that high, it's 3x, right? So we're in that 3x territory up here. So when we're in the 3x territory, where is your stop? So logical stop is here. So we extend this to see where we get stopped out. First logical stop is here. You drive up. If you don't take an exit here, and the reason I said if you don't take an exit is because now we have this gap, and it tried to go halfway through that gap, rejected. Halfway through that gap, rejected. Halfway, rejected. Almost completely rejected, right? So if you haven't taken notice, maybe not the first time, but at least the second, third time where you keep getting there and getting rejected, which is a good sign to exit most of the remaining positions, right? Yeah, like at least 25%, or you leave 10%, well, whatever position size makes you feel comfortable, right? We have taken our first 50% at 2x as we let it ride. So where's the logical stop? This was the first logical stop after the entry, right? So as price give us the 2x, we move to break even. Then as price gives up, we move it here. Now, if we haven't taken any position here, any exits, or even if we have taken an exit and some is remaining, the next logical stop is here, right? This is the next logical stop. When price comes down, gives us another low and tries to make a higher high, because it's still a higher low, but it tries to make a higher high, but it's double top here, right? Even highs, we get stopped out, which is okay, right? It is okay to get stopped out here because we're only getting stopped out here on the remaining 25%, 10%, whatever the scenario is, right? But I just wanted to go over that process again and again, right? So if we have it in our head continuously, this is where we have our stops, then we're really in a sweet spot always, right? So this position here, if somewhere here, not quite 3x, but you've taken most of your position, and then if you get stopped out here, it's still 2x, right? You got stopped out at the initial 2x, so your total position is better than 2x because everything got exited at 2x or better, right? So this is a fantastic trade if we follow through. right? If we follow through with our plan. And our plan is, on a monthly, we tested the 38.2. This is our green to green zone, right? That's where we are. This is where we tested that monthly green to green. It's not quite there, but it's close enough. This consolidation area, we have this hammer here or up here. Either way, it's a good trade. So now, to go back to the question, what's next? What's next? Here, for all practical purposes, this gap is closed. Because this guy came very close to it, so this gap is closed. So as we look at the rest of the week, we're making higher low. We're struggling to make higher high. We're equal highs, 3 times, 3 different days. Tuesday, Thursday, and then again today, right? Even yesterday, it struggled. We had a gap up, but it struggled. We closed that gap today. We tried to go up, it still struggled. So when you see something like this at the gap close, now what I want to see is, I will erase this. What I would like to see for a re-entry, for a continuation entry, is we break above that gap area and we use the gap for test. This is what I would like to see now for re-entry, and find a hammer here, find railroad tracks, engulfing here, boom. We take our next entry to do what? To take care of this gap. We have gaps always. Let's do this so we can see it better. We took care of this gap. Now we have this gap here. So this gap here, don't like it when it does this to me, when it's not a straight line. There you go. Okay, so we have this gap, right? So next, what I want to see is when I have an entry here, my stop is somewhere down here, logical area. This gap, if I close this gap completely, this is a 1-to-1 ratio. Do I want to take that chance? I don't know. But we have to see, right? But at least we know. If I take this trade, I know I have to exit here. A good size of it. And I have to have my stop way up here. Right? I don't want to give back all these gains because this is a 1-to-1 ratio. I'm going to be very, very tight with my stops after I take an exit. So very critical to do that. So that's what I see in the SPYs. But again, there's so much news every day, like geopolitical news right now, that is kind of crazy. So the market could go either way with no reason. And so we have to look at what's coming out. There's nothing really coming out in the US over the next few hours, right? The next 24 hours. But there's Australia has some unemployment, but it won't affect us. So Thursday, we have Powell speaking. He has the potential to move the market. We have unemployment claims. So we have some things coming up over the next couple of days that we have to look at. But so let's take that into consideration as we place additional trades. And if you look at Qs, they're playing the same story, right? They're moving a little bit better, but still it's the same story. We close this gap. We set an entry here, and it gave us that entry, right? So that when we were here, we said, hey, if we get this, we take an entry. It gave us that entry. When we closed this gap, we took an exit, right? And then we follow our stop So when you have your logical stop here, and then as you move up, your next logical stop becomes here, then you get stopped out, which is okay. That's exactly what we want. We want the stops to protect us, and we get stopped out. So we have a gap here. You can consider it closed because of this and deleted. I just leave it open. I think because it's to the upside, uh, I want to see what happens when we get there. It's kind of a reminder for us. But same story, right? So now I want to see higher high, higher low. I actually don't feel comfortable re-entering here because we had a good exit, and we had a good exit from this move up here. So I don't want to re-enter here because don't I just don't see convincing structure. We have, equal lows but lower heights. So I'm not convinced yet. So because of that, I just don't want to place any trade, but I feel more comfortable in the spies for that purpose. So this is what I see. This is what has happened, and this is what I'm anticipating over the next few days on where we're going to pull the trigger. Any questions on analysis so far? Okay, good. All right. Any trades? What's a beginner trade? Okay. From here. Okay. So when the next bar opened, you took a position, right? Okay. So I mean, one of the things I like is, as we were talking, is how you're, taking into account everything that we've learned, right? Everything like this is, I'm looking at demand, and I'm looking at fib, I'm looking at structure, and then you're adding like fundamentally what is the market thinking. So I like all of that. So you took this position. Where is your stop? So pretty much what I have it roughly. Okay. And then, so your 2x now, this is where it becomes tricky, right? So your 2x, I think because of where you took your entry, right? Because of where you took your entry, I said this is where we have an issue, or this is where we have an issue. So the reason I don't like Qs right now is structurally we're making lower highs. So now, based on your analysis, right? There's never right and wrong. It's how you look at it, right? How you paint the picture. So what I want to caution you is take care of this supply zone. What I mean by take care of the supply zone is uh, just because your 2x is right outside of that supply zone, don't wait until you get there. If it's like a gap up or one bar just keeps pushing up and it doesn't get rejected, if you have time to monitor it, fine. If not, like if it's 6:30 in the morning, right, 6:30 Pacific time, and the market just opened, it gapped up and it gaps up inside this zone, can you sit through the next hour and a half and monitor it, or do you take your majority exit and put a stop? Something to consider, right? Something to consider because you have this supply zone up here. But overall, so this is a good trade. Why do you take only a small position? Okay, so as you're learning, as you're doing paper trade, I always want to encourage you to ignore those things. And I'll tell you why. It's we never know which way the market goes, right? Even on a terrible news, sometimes the market goes up, right? We have no way of knowing. Even today is case in point. Terrible news, it started down, but then they said, you know what? There's enough demand, we're going to bring it back up, right? So, because we don't know, volatile market can make a good trade or make a bad trade. So it's 50-50. But if you only pick a few to trade and you happen to pick the bad ones, then you're not having that long-term consistency. Right? That's what we're looking for, right? Is be profitable over a period of time, not on a trade by trade basis. Right? Trade by trade, we don't care win or lose. But on a consistent basis, we want to be successful. So in order to do that, we can't say, this particular one looks too volatile, and then tomorrow's one is not volatile, I'll take that trade. Right? We can't be picky and choosy like that. If the chart aligns, if it fits your trading plan, if it gives you the trigger points, pull the trigger. You have nothing to lose, especially when you're doing paper trading. Because as you journal those, you'll find that, okay, the last 10 times what I thought markets were crazy, I took all 10 trades, 7 of them were good. Right? Your journal might say that. Or you'll say all 10 of them were bad. Then for your trading style, you never take those trades again. So my point is, you either take them all the time or you take them never. You can't be taking them, haphazardly. It has to be a constant uh, action. If that makes sense to you. Yeah. Okay. So now we just wait, right? Now we just wait and see what happens. You're taking a little bit of heat because initially pushed up and then it went down. But when we look at the futures, this is like for me kind of flat. The futures, what they're saying right now, it's this is kind of flat. So I'm not too worried about it. But okay, that was good. So any other trade? So for you, watch out for this supply zone. If you clear this supply zone, then your next area of resistance is this supply zone, but which is also very close to this gap. So I'm just going to leave the gap up there. So pretty good setup. Yeah. Okay. All right. I think if we haven't taken any trades and we've we've prepared for the next week, so we can wrap up for today and then reconvene next week. All right.